Good morning to you, good viewers on social media channels of UBA Ghana, and welcome to yet another edition of UBA Ghana Business Series. It's going to be an exciting time as we discuss the challenges and solutions for accessing affordable and flexible financing options for your SME. We have the right person to deal with this topic for us this morning, and let's get to meet our resource person. So our resource person is into risk management. Kenneth Owusu Asante Amponsa is the Chief Risk Officer of the United Bank for Africa Ghana Limited. He has a wealth of experience in risk management and management information systems across multiple channels. He's worked for over 14 years in various sectors within the bank, within various areas within the banking sector. His expertise spans across areas like risk management with specialization in credit, enterprise, and quantitative risk management. Kenneth holds a BA in economics and has a Master of Science degree in MIS from Coventry University. He's a certified professional and quantitative risk management professional and holds the international certificate in banking risk and reputation and regulations. Kenneth worked with a number of banks in Ghana before joining UBA. And here at UBA, he supervises the credit risk management, credit risk office, supervises the operational risk. He deals with recoveries, deals with sustainability and social investment. So, ESG desk also supervises the information security department. So, and also market risk. So he has a big portfolio. He understands the business of SMEs and what you do, and he's the right person to deal with the topic that we're looking at this morning: challenges and solutions in assessing affordable financing options for SMEs. Good morning, Kenneth, and thank you for joining us.
Good morning, Henry, and good morning, everyone on this platform. Thank you for the introduction. Almost like a campaign platform.
I'm super excited to have you at my beck and call today because as moderator, I'm going to be calling the shots today. So thank you again for joining us. So Ken, your opening remarks on the topic.
All right, thank you, Henry. And I must say, to start with, yes, we're going to discuss challenges and solutions for SMEs in accessing affordable and flexible financing options. I got a few calls when this topic came through. People asking whether we're going to share money. No, we're not going to share money today. We are going to look at a way where we can then tie every bottleneck that we have when it comes to SME financing by understanding the space that we play at. So that is really the discussions we are going to have. And the SME financing is something that is really at the forefront of economic and national development. And everywhere you go, is really being the bedrock of the economic growth. And personally, it's a place that I love because you can't move an economy, you can't move industries without the SME playing part. So that is why I'm interested and well enthused when it comes to discussions of this nature. So Henry, if I have your permission and the permission of the others, I will take the lead in the discussion.
Flow, bro.
All right, thank you.
Yeah.
Okay, so what we have now, we have SMEs what become the focus of attention for development stakeholders worldwide. And what I mean by development stakeholders, aside normal financiers, you have investors, you have development partners, everyone is interested in this space. Why are they interested in this space? They're interested in this space due to the contribution of the SMEs worldwide. If you take Ghana, for instance, the contribution of SME to the entire GDP is not less than 70%. If you have that at the back of your mind, that should tell you the enormous importance of SME business. So supporting SME growth and direction is something that everyone within the economy should be interested in. Okay, But before I go on, I would give an outline of how the discussion would go today. I will discuss the categories and definitions of even enterprises and why SMEs. Then I'll look at the contribution of SMEs to the entire economy. Then we'll discuss challenges to financing the SMEs, which is really the crux of the discussion today. Then how do we navigate those challenges? Then last but not least, and also important, what are the financing options for the SMEs if we need to support them? So that will be the outline for the discussions today. What categories do we have when it comes to enterprises? See, we have two extremes. We have the large enterprises and we have the micro enterprises. Now, funding towards the large enterprises are very simple. Everyone wants to have a bit of a big giant. So you have the large corporates, all financiers, all banks, all DFIs, everyone is throwing monies at them because they are large. So they have multiple financing options. So those large corporates you see in town, the likes of the Casa Precos and Co., those are the large companies we have in town. So that's one extreme. Then you look at those in the micro side. Those ones are the smaller ones that are also contributing to economic growth. They have also multiple financing options, but then they have lower interest bearing facilities from donor agencies. Mostly they get grants. Then you have numerous rural banks and microcredits also pursuing these micro enterprises. So at the extreme and the large and the micro, funding towards them is straightforward. You can see them and you can fund them. Where the issue is the SME. That is the small and the medium. And that is the middle point. And that is where the focus is. And that's why the discussion is necessary this morning. These smaller and medium ones, they have limited financing options because the high borrowing requirements. Their funding needs lower to be provided by these venture capitals and all private equity firms. All these people are now targeting towards the big guys, that's a large corporate. So funding towards them, because their needs are lower, it becomes a bit cumbersome for private equity funds and other institutional borrowers to even consider them. But can they go down to the micro level? No, because their needs are also high and above those micro lenders. So what do we do? And that is a discussion how financiers should come together to look at how to solve the issues within the small and the medium enterprises. Now, if you look at worldwide and discussions, there's no common definition when it comes to SME. There's no common definition. But then in most instances, you are guided by international reputable agencies like the IFC, and they've given categories or definitions for SMEs based on their funding need. So the small enterprises, typically you look at loan size of $10,000 up to $100,000. These are the ones we call small enterprises. Then which ones are the medium enterprises? Those are the ones that have loan size of about $100,000 to $1 million. Now let's come to Ghana. If the world does not have a specific definition, does Ghana have a common definition? Ghana as a country, we also do not have a common definition for SMEs. All the data we have, every institution has a way in attempting to answer the definition when it comes to SMEs. But then there's been an attempt to classify based on employment size and turnover. And that's what guides most banks in their categorization of SME business. Which ones do we call small? The small enterprises employs between 6 to 30 people with an annual turnover of over $25,000 up to $1 million. These are small enterprises based on the categorization and the employment size and turnover. Then the medium ones, they employ more than 30, so 31 up to 100 people with an annual turnover of $1 million up to $3 million. These are the ones we find in the middle and call them the medium enterprises. So if we need to consider S and M in terms of the enterprises, that is small and medium, then we are looking up to employment size of 6 up to 100. Once you get the categories in this format, realize that you know what you are dealing at. Any staff strength or employment below 6% now goes to the micro level. And the funding towards them, as I already mentioned, is done through the rural and the microcredit other grants with lower interest bearing based on how they operate. So that is the attempt we have in even trying to categorize the SMEs in terms of Ghana. Now I'll move on to what has been their contribution so far. Globally, if you look at the statistics we have globally, and I'm speaking based on an IFC document, 90% of businesses globally are SME. In Ghana, 92% of it is constituted by SMEs, of all businesses, 92%. I'm speaking also on the Ghana case based on the micro small scale business policy drafted by the Ministry of Trade and Industry. So when you go to the website, this data is there. Now, if you look at employment globally, 63% employment is brought about by SMEs. In Ghana, more than 80%. When you look at contribution to GDP, globally, 50%. Ghana, about 70%. When it comes to the value chain in manufacturing, the sector accounts for about 85% of manufacturing employment. So these statistics are not just figures being thrown about, but based on data driven. And it speaks to the fact that the SME space is one that needs serious understanding, serious consideration, and serious support because of the contribution bottom line to even the global and the local economy when it comes to Ghana. One thing that the SME also does is that it handles equitable distribution of national income, so that if the SME is attended to well, you realize that you move away from this rural urban migration. Now, everywhere you go, if the SMEs are supported, you realize that people there are able to generate their own income and support themselves, so that it avoids issues of rural urban migration. Then when it comes to regional development through industrialization, you realize that if the SMEs are supported, and really that's what they've been doing, but not in the quantum that they want, you realize that it will affect positively industrialization of rural and backward areas. So these are issues of national consideration. These are issues of national support, and that is why the support and understanding of the SME space is key. Let me move on to the challenges that the SMEs face. As much as possible, I would want to do this within the next 20 to 25 minutes so that we can have room for discussions and questions. So I'll just go straight to the punchy areas, then we'll look at it. What are the challenges facing the SMEs? And that's another craft we need to discuss. If we take a typical casino, for instance, for the purpose of example, one would say that SMEs are not even getting to the slot machines. They are nowhere there. And this is a statement I'm borrowing for Paul Clement Hunt, who is a UNEP Finance Initiative head. If the financial world is a casino, SMEs are not even getting to the slot machines. What it means is that even if there are pool of funds, the SME support is very negligible. So then, why do we have these challenges? The first one has to do with perception. And I'm carefully stating perception because the perception could be induced, the perception could also be wrong. There's a perception that small is risky and unprofitable. And if the notion is that small is risky and unprofitable, no one will be willing to come into that space. There's also the perception, which is also induced, that small does not have the skills to successfully run a business. That is a perception. So with these two perceptions, it then translates to how they are treated. So you realize that professionally, the attitude towards the small enterprises is very, very, very low and poor because of the perception that small is risky and unprofitable, and also the perception that small does not have the skills to successfully run a business. But are these perceptions true? Maybe true, maybe false. Why do I say so? Because if you look at the business risk issues, which is also another challenge that the SMEs face, most of these SMEs, which are also informal in nature, they have low financial management skills. And there's also lack of proper documentation and bookkeeping to support loan applications or funding applications. Then, when it comes to structures, which most financiers look at when it comes to business continuity, the structures are weak internally. Then, because these structures are weak and the perception out there that small is risky and unprofitable, it translates to very high collateral requirements, which is a major challenge. Then, when collateral requirements are coming through, then you can't discount the issues around high cost of borrowing, which eventually will erode business earnings. So, aside the perception, which is also induced, to an extent, the business risk issues, which we will delve into later on, give a bit of credence to the perceptions. Unless and until the SMEs and other stakeholders come together to fine tune and even guide the space and target it towards ways that the perception can be positive. We also have institutional challenges. And in this way, I'm going straight to the banks. Now, most banks are really, when it comes to capacity, we have under capacity and unskilled staff of most financial institutions to deal with the needs of SMEs. The understanding of the space is quite specialized, but also simple. If the understanding is not there, it is difficult to have financing options and products to address the SME borrowing needs. That is also an institutional challenge. One other thing that these SMEs also have as a challenge is limited access to market intelligence. As to the direction of the product lines, the market prices, most of these information are not easily accessible to most of these SMEs. So it becomes difficult for them to move in the direction of the market. Another way we also have to look at is the informal nature of this sector that is also affecting their capacity to drive in capital and also training needs. How we navigate these issues around institutional challenges is also one that we'll discuss. The other bit, which is also a challenge, and I will not dwell so much on for obvious reasons, has to do with policy and regulatory issues. This has to be with the top, that is government. What is the tone of government support? But I'll not dwell into this because that is a major issue that all stakeholders are discussing. But what is paramount now is how financiers like UBA, how financiers like other banks and also fintechs can come in to navigate the first three issues, which is the perception-induced challenge, the business risk issues, and institutional challenges, which can drive us to unravel and even untie every bottleneck we find within the SME space. Navigating the challenges. A wise man once told me that there are three people that you have to be upfront with: your lawyer, your doctor, and your banker. And I think now, as time went on, I began to understand your lawyer, your banker, your doctor. You can't withhold information from. Let's speak to your banker. Bankers need to build trust and transparency with you. If I have every information on you, I will be able to determine the approach to lending to you as an SME. Financiers are mostly interested in your cash management, whether it's through Momo or bank accounts. Now, what do we have? We have instances where SMEs only rely on their bank accounts, but they also forget the fact that transactions flow through the Momo account, and there are statements that can be generated from your Momo account. If I need to take a decision on a holistic view of your business, relying solely on your bank account is not the way to go. Give the financiers adequate information as to the ins and outs of your cash. If I understand the ins and outs of your cash, it gives me comfort to deal with you more than collateral. See, banks or financial institutions don't lend because of collateral, but we usually do not lend without one. The only way that we can navigate this is if you have a full understanding of your business. Trust me, there are banks that are doing collateral-free lending because they understand your business, because you understand your cash movement, and UBA is one. There are several products that financial institutions have that consider your cash ins and out without considering your collateral. So if you give me all these information, it becomes easier for me to even work on your borrowing cost, because your cost of borrowing, which is really your interest payment, and that's the chunk of it, is a function of the risk I take on you. What do I mean by the risk I take on you? I want to give you money to support your business, but then I don't have a full understanding of how the cash comes in. Banks and financial institutions always follow the money. The money the banks financial institutions give out are mostly not theirs. They take it from others and give it out for additional income. Now, what do we have? If I have to give it to you, I should trust that that money should come back. The only way I can trust that is if I understand how your movement works. If I understand that, I can even reduce your risk. Then I can reduce how much I charge you when it comes to interest. And trust me, this is a news flash. Banks mostly lend based on Ghana reference rate plus a risk premium. You can always negotiate on your risk premium. What is the risk premium? That is the perceived risk and the cost I add to the Ghana reference rate because I think you are risky. If I have full information on you and I know that I have your full business with me in a particular bank, within a space of 1 to 8%, which is the premium I have to charge on you, I can decide to charge you 2 because the value addition I'm getting for your full business within my bank will be more than I can compensate for that 2% additional charge I'm taking on you. So if banks and financial institutions understand your business, it makes it easier, one, to manage your interest cost or your interest expense, and two, even water down the collateral requirement because then I know I'm not lending against your collateral, I'm lending against the cash that I see always. That is a way of navigating the challenges. Adequate and sufficient information is key. Now, I'm going to a very sensitive area too, but permit me. Not everyone should borrow. Not everyone should borrow. Why do I say this? Why would you want to borrow as an entity when you can improve your receivable collection approach? Sometimes you have so much in receivable. What do I mean by receivable? People owe you. Because you are not able to collect efficiently, and yet you want to continue with your business operations, you are forced to borrow from banks. And when banks realize that you have issues with collections, it even elevates your risk profiling so that I would then have to be calling in for collateral and all that and even charging you more. So if you can improve your collections when it comes to your receivable, you may not necessarily need to borrow from a bank. Unless you expect the banks to fund the receivables for you because you have an arrangement with those people that owe you. And in that case, banks have financing options to sort that out for you. Another reason why you may not want to borrow is that you are holding on to so much stock, even above what is necessary for your business. You take stock because you want to sell. The holding cost in this inventory or the stock you have far even outweighs sometimes the cost of borrowing, because then at certain points you need to let them go because they are spoiled at the warehouses. But then you want to borrow to cover them and keep stocking. That is also not an effective way to go. In that case, it also elevates your risk profiling. So if you have adequate stock, why won't you let some go to replenish the business needs and borrow exactly what you need instead of borrowing to even cover the stock that you are holding because you cannot sell? In certain instances, example like the real estate, example like people who do supply contracts, if you don't have confirmed offtake, for a transaction you want to go into, why would you want to borrow? Because then it becomes speculative. And typical banks will not want to lend based on speculative cash. So if I understand that there are off-takers who are ready to take your supplies, it becomes easier for any financier to look at it and fund you accordingly. Another way we should also look at against borrowing, which mostly is not even required. When you want to do expansion as a business entity, please don't expand with an overdraft. You have access to term loans for expansions, use them. Overdrafts are faster ways of managing even your interest cost as an SME, because you only pay the interest based on how much you've utilized and how quickly you're able to pay back. So if you sell and collect daily, sell and collect weekly, you're able to manage how much you pay on interest. Use an OD. Don't use an OD to expand and develop another warehouse somewhere. It becomes a static position in your account, and the interest cost on it will keep ballooning, which will affect your earnings. So, two, we should not borrow when we don't have to. Another challenge that we have in navigating is that if you want to navigate this challenge, most banks also see customers through the eyes or the lens of statutory payments. Let's be disciplined enough to pay all our taxes, because if financiers are looking at ways where your business can be clamped down, which will affect your repayment, not paying taxes and other statutory payments can clamp down your business. If your business comes to a halt, it means you are not able to service whatever payments you have. And typical banks would also, without information from you again, will still be charging you interest. Until such a time where you can come together and people say, come to a Jesus conversation and open up to your financiers. As I mentioned, you can't withhold information from your financiers. Tell us, based on A, B, C, D, these are the reasons why this cannot be paid. These are the reasons why it's been clamped down. Then there are discussions around that. Another way to navigate the challenges is to establish strategic partnerships. Maintain a positive relationship post-lending. After you borrow money, pay. After you borrow money and their covenants, comply with them. After you borrow money and there are certain terms and conditions, maintain them. It is only when banks build trust, as I mentioned earlier on, with you, based on this relationship, that is when we can advance more to you. Because if you come in today and I'm able to give you 100, and you act in line with what the 100 required, and you come in for 250, there's no way, considering the fact that you've demonstrated a growth potential, I will not give you more. So once we have that at the back of our mind, it guides us to navigate the challenges when we need financing for our businesses. Then another key consideration we need to navigate is to build a strong business case by strengthening financial literacy and management skills. Directly, let me speak to succession planning. Most SMEs in Ghana are one-man businesses. And if financier is looking at you, I'm looking at you in succession planning. In a year or two, if you are no more there, who can handle the business? Now, in these instances where people are just migrating out of the country and people say Japa, the young is moving, the elderly is also moving. So now, if I'm funding a business, you ask yourself, am I funding for the person to leave? I have seen businesses that are worth supporting, continuing, that the business owners have just left shop and just japa, for lack of better words. So then, if there are people on ground who can support your business even in your absence, to the extent that I don't need to be looking for you when I need to collect cash from you, but then your business functions with or without you, it gives comfort to financiers to support you. So we should be looking at that too. Then when it comes to technology for financial innovation, That is also another way we can use to navigate the challenges when it comes to SME lending. We have fintechs, we have so many systems that we can deploy to SMEs that can support their business growth. Because now we've passed the stage of working hard, we need to work smart. Once your business operations are efficient, you realize that you save costs on so many things, even operational costs and expenses. Even staff costs you're able to save. So once you leverage on technology, it affects the bottom line. And that is a way that financiers also look at to see what structures in terms of technology that is driving your growth, if any. So I've dealt with about 6 of ways we can navigate the challenges when it comes to SME financing. Let me quickly dive in now to the financing options. An observation is that there's a lack of convergence when it comes to the needs of the SMEs and the financiers. What do I mean by that? SMEs need finance so they can advance their businesses. The financiers also need assurance that the money that we give out will also come back. That is why navigating the challenges was necessary for us to touch on before we come to the financing options. The financing options mostly are 2. Mostly, we have the traditional funding where bank loans come to play. And banks have specialized financing programs for SMEs. Speaking for UBA, there are so many offerings when it comes to the SME space. So many offerings. Whatever business you do, even within the agri value chain, there are ways we can support you. And that is where it is necessary for an understanding of the SME space for all financiers so that you can target lending towards the various aspects of the SME business. Another way in terms of traditional funding has to do with government support. Last year, there were discussions around the Youth Start. That is a program, Government of Ghana program to support the youth entrepreneurship. It has started to an extent, other banks are doing it. Development Bank Ghana also has a pool of funds for SME financing. Together with their partnering banks, realize that there are avenues of supporting these SMEs so that the pricing is low. Collateral arrangement are banks determined because then every partner financial institution that is working with DBG assesses your risk. So now see this way. You are an existing client of, say, UBA. You meet all the criteria for us to support you through, say, a DBG, Development Bank Ghana. It is possible for you to have access to cheaper funding based on the fact that you've been disciplined and route all your transactions through UBA. The same applies to most banks that are dealing with DBG. So once you are disciplined and once banks see through your ins and outs, it becomes easy even when you need to partner state institutions to support you. Another way that the government has come in is to use the Ghana Integrated Risk Sharing for Agri Lending, GESA. This is an instrument that supports fully end-to-end agri value chain. So when you have an agri business, walk to any bank, engage the bank. This is what you have. The GESA has instruments that would de-risk. If I say de-risk, it will now reduce the stress of banks so that they cover about 70%, up to 70% of the risk the bank is taking on you. That does not mean that you as a business, you let it go because institutions are taking over your risk. All it speaks to is that to whom much is given, much is extracted, not expected. We extract some more because once you're able to extract more from you, then we can also advance more to you. So GESA is a way of looking at funding for SMEs. Then we look at the alternative financing options, and these are the new ways that banks also look at it. We have the traditional receivable financing, and most people understand as invoice discounting. But guess what? Invoice discounting, receivable discounting, the pricing is not different from any other commercial loan. But is there a way you can also have access to this same receivable back transaction at a lower cost of borrowing? Yes. If you establish good partnerships with the large corporates and you have the likes of, let's say, Guinness Ghana, and Guinness Ghana, you are a vendor or an SME who supplies or a vendor to Guinness Ghana. Guinness Ghana, based on a relationship with a bank like UBA, will say that UBA, all my funding comes to you already. I have these vendors. They will need money. But because I'm also going through my own cash management, I'm not paying them immediately. So give them funding based on the fact that I'm here. I've given you my commitment based on documentation I've signed. And guess what? Because the risk is low, you see the money of Guinness all the time, and it's initiated by Guinness. You have something called a reverse factoring or reverse receivable discounting. Once it is the opposite of reverse, the charges are extremely low. It can be as low as even 10% because what is at stake? What at stake is that, and even that is not even called interest. What banks do really do is to take you based on the fees and the charges that are available. So these are products that banks can also deploy to support the SMEs once the SME business is understood. Another instance of financing is to explore trade credit and supplier financing. It's not always that we have to rush to banks. Not always. If you establish good relationship with your suppliers and they give you good credit terms and you pay within a period, all the banks will do for you, whether it's an offshore or locally, is to facilitate the payments on behalf of you, the SME. Let me give you an example. If you are a supplier to Nestle Ghana Limited and you need money to offtake from another vendor, let's say you have offtakers who give barley. So now this barley producers need to, or sorghum or millet, whatever goes into, let me do Guinness again. The sorghum or millet producers need to give these products to you because you have to offtake and give to Guinness. There's a way to go about it without posting so much collateral, without the banks being on your neck to see what you can do. All a financial institution has to do is to give its letter or instrument to you. Give to the sorghum or the millet person. Supply Guinness. If Guinness confirms receipt of this product, I will pay you within 24 hours. What the bank has done for you is to facilitate the payment. We've also taken away the performance risk on you because now we trust that Guinness will pay us. So these are ways that we can handle the lending to SMEs. Aside the traditional come and borrow, we are lending to you at this cost, at this pricing. Another way, which mostly starts SME businesses, is the peer-to-peer lending. And this is really how it starts. If I need to start a business, you engage your friend, you engage your colleagues, but it's a function of trust. Most friends or relationship has been crippled because of peer-to-peer lending. If you just establish and maintain the trust in us, and you know that I'm giving to you to promote your business, you have to get it back. If peer-to-peer lending has succeeded in most instances, I'm not sure the micro and to a large extent even small enterprises will go running to banks. So that's a way we can also look at it. Another developing way is the green approach. That is sustainability linked loans. This is a special area, but then it's a very good area banks now are targeting to promote their lending to SMEs. Some banks in Ghana are already doing it. UBA is at the verge of also doing it. What does it entail? Unlike traditional green loans are the ones targeted towards climate risks, solar, and all those greenhouse, all those things targeted towards traditional green loans. But that is not what sustainability linked loans are looking at. These loans can be given to you to expand your business operations, provided you can meet the KPIs tied to either social, economic, human, or environmental positive impact. So most banks are tapping into pool of funds to support SMEs. What it means is that SMEs need to start doing their homework and start cleaning up their space in readiness for this cheap funding. the funding is so cheap. Once you can meet certain criteria and KPIs, it becomes easier for you to deal with. Another way we can also tap into funding is to engage venture capital funds. These are patient capital that support long-term growth of businesses. Now, most banks, based on the current happenings in the economy, are really looking at short-term transactions. Unless we have your cash flows and we are certain, based on all the criteria, we can go along with you. But if you need patient capital that will relax for you to expand your business and give you room to pay as and when required, you also have to engage a venture capital fund because they have funding to support the businesses. Another way, you can also look at pulling in cheap funds, both at the supplier side and the banking side, is to come in through the aggregator-led programs. What do I mean? You have 7 of you SMEs who deal with maize supplies to the like of, say, Kedant, Yedant, Agricare. These are institutions that take the maize to add as feed for poultry. But amongst the 7 of you, you know there's one at the top who can supply more. And these institutions that offtake from you as SMEs, you are able to bargain for a better price based on the volumes you supply to them. Is it possible to come together and have one person lead to supply the likes of the Agricare, the Kedant, and the Yedant who are ready to offtake from you? In that case, you're able to negotiate for better pricing. In instances where payments are delayed based on the terms of payment with you, you realize that you can also work to a bank knowing that the volumes and the cash the bank is able to see, and the bank can give you something against that. So these are ways that you can manage your financing options when it comes to the SME space. So that we make room for questioning, I would conclude and pause here to say that the SME space is a space that is ripe but is still green. It's ripe because the contributions to national economy and GDP is there for everyone to see. It's still green because once there are challenges, it means there's room for development. There's room for development for financiers, there's room for development even for the SMEs themselves. So we coming together, both SMEs and financiers, with the likes of UBA coming together to unravel the issues herein, what we are targeting is how to make an economic impact end to end. Our support as financiers are there, but then the work starts with us as SMEs. We can only give money when money is coming back. And once the discipline is established, lending to SMEs, supporting SMEs will not be a challenge and an issue going forward. Thank you all. I'll be on standby for questioning.
Throwing some thoughts on this. Belinda Yadankwa Efa, we see you. Thank you very much for joining us. Nanaya Denchi, I see you. Well, drop your questions, put your questions in the chat session so that you're watching on Facebook or LinkedIn or YouTube or Instagram. Still ask your questions and we'll bring them to Kenneth. Akoso Yebwa, we see you. Thank you for joining us. Harry Ano, also thanks for joining. And Elvis Eduqueno, thanks as well for joining us. Now, Ken, we have a case study for you, case study question for you. Efosami says that I'm not a customer of UBA, but I need funding to plant my coconut seedling on a 30 to 40 acre of land, which will be integrated with irrigation systems of vegetables and other food crops. My business plan is available for further questioning. Will you fund this project? Discuss.
All right. So thank you, Efosami, and thank you, Henry. Efosami rightly also included that his business plan is available for further discussion. So Efosami, let's look at what you have on paper. Let's discuss the details to this discussion, and I'm sure together we can find a way to support your business. So let's discuss. Submit your business plan. Route it through. We have an SME desk, fully fledged SME desk, and we have the various branches who are also ready. So just you can also walk through the head office, and we can engage on this particular need that you have. And it's also good you mentioned that you have a business plan because it's key for us to take a decision. We need to understand your business, then we can support you. Thank you very much, Officer.
Thank you, Ken. So while you were talking and doing your presentation, you made a very good example, and I was wondering why Guinness, but never mind that. But you spoke about reverse factoring in as a model for credit instead of direct financing, and I'd like you to throw a bit more light on that. How do SMEs benefit from this? Because one of the things that we hear often is that we're being choked out of, the financing scheme. But you talk about reverse factoring, which is very interesting. Could you throw some more light on that?
All right. Thank you, Henry. So I would say reverse factoring is not new. It's not a new thing. Just that most banks or financial institutions uh, are not so much in that space. They're not so much in that space because it's not really a borrower-led transaction. If I say a borrower-led transaction, it's not initiated by the borrowers, that is the SME customers. It's initiated by the large corporates who are at the top and who also need to manage their cash flows, even as they support their vendors. If their vendors are still in business in terms of supplying them, the large corporates are also in business. One way their vendors can be in business is if banks are able to finance them. So a typical large corporate, let me use again, let's say you have Talo, and Talo has vendors that they handle so many things for. And Talo has an account with UBA. Talo can have an agreement or discussion with UBA to the extent that one, I have this list of customers or vendors that supply me. I want to pay them every 60 days or 90 days. But then the only risk is that you are thinking, how would they pay? I am here. You see my account. You see my funds, all right. If you're able to gauge and estimate, and can I go on, please?
Sorry about that interruption. Can you please go ahead? Yeah,
All right.
sorry.
So if a bank is able to estimate that for every 10 Ghana Telo has within a period, the bank can give 7 CDs out to their vendors because we are giving you a discount on the cash available. In that case, there's no risk. It's as good as a cashback transaction. The payment is certain and is sitting in the bank. Why banks are mostly scared is the fact that the payment is out of the bank and is dependent on a sale of another product or collection based on receivable. But if I'm seeing the cash here and I'm lending against the cash and I have the commitment from the giant like Tello to take the cash and pay you off, then it's really ring fenced. So my pricing on you has to be low. And that is an innovative way of supporting SMEs and also reduce the cost of borrowing on them. Yeah, I don't know if I've been able to explain
Thank
it
you.
effectively.
Thank you very much, Ken, and apologies to our audience who say that some part of the network is buffering. It's pure internet. I'm sure has also to do with the weather. We apologize for that, but they are still live on the UBA Ghana Business Series, where we are discussing the challenges and solutions in assessing affordable and sustainable funding options for SMEs. We're talking to Kenneth Ponsa, who is the Chief Risk Officer of UBA Bank. Now, Kenneth, let's discuss briefly. Last year, UBA signed a 6 billion partnership with the Africa Continental Free Trade Area to support funding of SMEs in Africa, trade amongst African countries, etc. Could you share a bit of light on that facility?
Okay, thank you, Henry. So it's good you asked this question. So the ASCA product that is already running, realize that the support for SMEs is high and is targeted towards specific sectors which we know are driving the growth. So you have the likes of the transport, you have the like of even the manufacturing, you have the like of pharmacies. All these are sectors that we seeking to promote based on how their contribution to the economy is. So you come in and you have not less than $150,000. We can give you in the form of an asset finance. We can also give you as working capital, however you want it. So the minimum amount you can get, or the maximum amount you can get, is $150,000 Ghana cedi equivalent. Pricing is so low. When it comes to in terms of the fees is also notional compared to the normal market rates that we have. So these and more are products that UBA has. The ASCA is one, backed by the guarantee fund which we are using. And we also have the other SME capital loans that are also infused to supporting these SMEs. So it's good you mentioned the ASCA product, and the sales are ongoing. We have customers who are coming in, the business teams are driving that, and that is a way that UBA is using to support this. And that is, I think, one of a kind when it comes to the industry and even the West Africa area. So that is something that we are also pushing.
So, Ken, if I come to UBA now, I'm involved in some business that I want to be able to export in Africa in the priority areas that you mentioned. UBA is a good partner to speak to.
I didn't get your question, Henry.
I'm saying that, so I'm already doing some business in the areas that you mentioned under the after facility. You're saying that I can come to UBA for support to export into Africa?
Yes, yes, and one thing we also pride ourselves in is the fact of our network when it comes to even our rich and even other subsidiaries in Africa. So wherever
Mm.
you are, we are able to serve you. You can have a transaction in Burkina Faso or Benin, and we can initiate it in Ghana, knowing very well that our counterparts in Benin or Burkina can support you
Mm.
and conclude that transaction with you. So it's quite seamless when it comes to UBA support, when it comes to SME, whether it is local or even exporting, because of how we've our approach is when it comes to financing. It's not really just Ghana based. Wherever you are, we need to support you. Export the instruments we are using to support you. And when it comes to even import, which well you didn't mention, and we have ways of doing it for you. Normal bills. We also look at even the LCs we do for you, and we're also guided by the Bank of Ghana forex requirement in also supporting you when it comes to advance payments. So all these are ways that we use to support your businesses. Our subsidiary Rich is there, so we are comfortable to deal with you, knowing very well that we have partners to support us wherever we are. Yeah, thank you.
Thank you. So, Ken, finally on this area, when I come to you, typically, how long would it take me for me to, all things being equal, my documentation is right, everything is okay. How long would it take for me to access a facility from UBA to support my business in Africa?
Okay, okay. So it's good. It's good you mentioned all things being equal because it's our decisions are really information driven. So
Yeah.
once, and I also mentioned information is key in navigating the challenges. Once you have every information to take a decision, once you have every information to take a decision, within 48 hours from the time of approval to you executing the documents, you can get your funding maximum within 48 hours. And that's our commitment, subject to full information. Because once you have the full information, there are customers that have even gotten same day transactions. There are customers
Mm.
gotten same day transactions
Wow. Same
because
day.
same day because of availability of information. Once the information is key and necessary and even available for us to take a decision,
Mm,
we don't waste time.
mm,
We don't waste time.
mm.
We don't waste time. And because really, a good loan or credit facility is not the one you give, it's the one that has been paid back. If
Okay.
we understand how it's going to be paid back and we know it to be paid back, we know we can deal with you. And that is a function of information and data.
Okay.
So within maximum 48 hours, but others have gotten it within a day before. So it's possible.
Yeah.
Thank you.
So a good loan is not what has been given, but what has been paid back.
Yeah.
Okay. Thank you very much. I can quote this one and say Kenneth Amposa, 2024. Wow. Okay, my next question is really drawing the curtains to on this wonderful discussion we're having. But it's from Elvis Eduqueno, who more or less asked a question that encapsulates everything we've been discussing this morning. So Elvis says that in your experience, what are some of the most common obstacles faced by SMEs when trying to access affordable and flexible funding options? And what innovative solutions have you seen effectively addressed these challenges? So, practical, what have you seen? What are the challenges practically? What have you seen of helping them to address these challenges?
Okay. So, Elvis, uh, okay, I think I touched that on that early on, but I'll touch on that again. The most common obstacles are really three. One is really perception, and that is to summarize everything. Perception out there, it affects all the SMEs. Because you are small, you are risky, and you can't do business. So it's a perception. Other bit has to do because you are small, you don't have the skills to support your business and to grow your business. It's a perception. Then, because of this perception, how we treat you, we box you, and we consider you in a way that affects our decisions and our dealings with you. But then these perceptions are also a function of the business risk issues that we see and has to do with your bookkeeping. There are challenges when it comes to bookkeeping by the SMEs. So these are things that need to navigate. When it comes to financial management skills, it's also something that needs to be navigated. Which one do you call cash? Now, the advent of COVID, we also realized that cash became king. People who are ready to use their sales proceeds to sort out immediate family issues before they sort out loans. That is why most companies or even banks decide to extend and restructure. What it then speaks is that eventually, when the industry agrees to do open banking, we can see wherever your money is going. Then it becomes easier for us to navigate and even solve your issues for you. But until then, you have access to your Momo account, which you should also use to support your normal bank account because certain sales go through that. So that is a risk area. If proper bookkeeping, financial management, even what you disclose as cash is not clear, it becomes difficult for us to even deal with you. Then issues have to do with collateral. Because of the perception and the business risk issues, collateral becomes an issue for the SMEs. And once collateral starts coming to play, pricing or interest cost or cost of borrowing decides to go up. Ways that innovatively we can lend to you are what we've discussed early on to suggest that one, we have the usual banks, and two, we have the government of Ghana support. The usual banking loans are the ones that we mentioned, but these are mostly expensive. But then you can also, and that is where the fintechs come to play. Banks can agree to collaborate to compete when it comes to the fintech space. There's no need to compete with the fintech space because they've come in to say. So banks can collaborate to compete when it comes to the fintech space because then they have the systems and the know-how on how to get the wide and the rich. And the banks have expertise when it comes to the pool of funding. So together, we can then target our lending towards you. So that is an innovative way we can be looking at. Then alternate financing option, I've already touched on reverse factoring to a large extent, peer-to-peer, which is also key. Then sustainability-linked loans, which is a new area that banks should also look at and SMEs should also look at. Once you meet the targets or the KPIs for the human bit, the economic bit, the social bit, and the environmental bit as an entity, you can get cheaper source of funding for all your operations. So these are ways that we can look at when it comes to the innovation around them.
All right, thank you very much, Ken. So Nanaya Denchi wants to find out what the current collateral coverage of UBA demands for SMEs are.
Okay, so let me take this again. For most, in fact, SME space and the SME lending space, the majority of the approach or initial approach is mostly unsecured for SME space. They are unsecured because really we are taking your trading assets, which is either your stock or your receivable. And that is not really tangible because the cost involved in even perfection, you don't incur that. Once we see your cash, UBA does not talk about collateral when we talk about SME lending. Once we understand your business and we see the ins and out of your cash. Unless you are going above what you are supposed to do as an SME, now you want to borrow based on the IFC description, you want to borrow like a large corporate. Then we can have a discussion because it doesn't become an SME lending approach. It becomes more of an individual credit that we need to discuss with you. But even that, collateral is not always the first thing we discuss. We discuss your way out, which is your cash. And if we need to do with collateral which is tangible, then we'll be guided by the usual 130%, 150% maximum, in line with what Bank of Ghana is requiring us to do, and nothing more. So, if I don't know if I've addressed your question.
Yeah, all too soon. We're getting to the end of our discussion today. As we're getting to the end, a lot more questions are coming in. So, Ken, I'd like you to help us box this together in your concluding remarks because Gomado Eche Dafsin said that the SMEs are mostly in the informal sector of the economy. What practical measures is UBA taking to tackle the problem of unstructured sector, as it were, to make them structured so that we can rope them into the mainstream banking sector? And also, Jermaine Echampon wants you to throw some more light on green loans. Can you explain or recap how to access this and the criteria? Or if there's a document that you can share, he'll be interested in that. So, Jermaine wants to know about green loans, and then Komado Echedasin is talking about what we can do to help formalize SMEs. And then with that, you add up and put your concluding remarks as we draw the curtain on this exciting conversation.
All right, Henry. Thank you. So let me take I say Eche, Gomado's one. So for UBA, and it's true, most of these institutions are informal. And that is why we periodically have sessions like this, the business series, to also guide our customers as to how to shape their operations for us to serve them better. About a month ago, together with the AFCA, we had also a session where we considered issues around the AFCA the program and how banks can play in that, especially UBA. All these programs and even discussions are ways that we bring on board all those informal SME players so that based on training, skill development, which we organize for them, we are able to shape them towards accessing facilities. Because the access to facilities is not always tied to bank lending, as already mentioned, but even has to streamline the operations to the extent that they can even have easy access to spontaneous financing or trade credit from their suppliers and their partners. So trainings are organized, stakeholder engagements are organized, and business series like these are also organized so that we can all shape the discussion and guide the players in the informal sector. So that's what we do as UBA. To Mr. Champon, Jermaine, on the green loans, see, when there's a difference between the green loans, which I didn't expand compared to the sustainability linked loans. With the green loans, the use of proceeds is the main idea. What are you using the money for? It should be targeted towards something geared towards the climate, the greening, when it comes to the solars, and even when it comes to reduction of emissions. All these are things the green loans are targeted to. Unlike the sustainability linked loans, whose criteria you are not supposed to even meet all. Once you engage your financier who has been able to pull this funding, we realize that once you meet a criteria under economy, once you meet a criteria under environment, under human, under social, based on certain KPIs, you have access to these funds and they are very cheap. Okay, so these criteria, because of time, I may not be able to go through all of that, but I'm available. I think I'll share, if it's possible, I'll share my email address, and I can be reached out, and even information on everything when it comes to I'm also available through another team members of UBA, and everyone in UBA is available and accessible when it comes to information on this, especially on the green and sustainability linked transactions. We have a team when it comes to the ESG desk, environmental social governance desk, and we work together with all stakeholders, including the credit teams, to develop and come out with products that support greening and even linked loans. So these discussions can be held even outside here, and I'm available to take this further, Mr. Champion. Thank you.
Thank you very
So,
much, Kenneth.
Henry,
Um,
if I have to conclude, that is, if you would allow me, unless there are questions I
please,
have to
please,
take away.
please, please go ahead.
All right. So I must say, and based on the discussions, it's been very fruitful, and I'm happy and I appreciate everyone who was able to join in the discussion. The questions and the inputs are very necessary. The feedback is also taken, and even there are ways that, as a bank and even as an industry, we can do to support the SME business. The game plan and the goal is just one: we support the SME business for us all to also succeed. We can only succeed as an economy, as an industry, if the SME, which contributes more than 92% to GDP, also survives. That is why the likes of UBA is ready and available to have discussions and to support the SME business. So together we can make this happen for the industry and for Ghana. Thank you very much.
Thank you very much, and Kennedy Pedro, I acknowledge your presence on our broadcast this morning. Great presentation. This from Bernard Sapombatin. Great presentation, Ken. I've really learned a lot. I think such forums should be organized more often to educate SMEs to help them become much credit worthy. Like you said, if you disclose your financials to your banker, it becomes easier for them to help them lend to SMEs. Nicholas J says, "How do I access a loan if I don't save at the UBA?" And Kenneth Aristo says, "Great presentation, Chief." Nicholas, call us and we'll be able to help you get a facility. If you want to continue this conversation, you want to have further engagement with Kenneth, you can send us an email at cfcghana at ubagroup.com. cfcghana at ubagroup.com will respond to you, or you can call our 24-hour customer consultants on 0800 833 833. The number is 0800 833 833, and our consultants will be available to help you respond to them. It's still free, so you don't bear the cost of calling these numbers. So call us today. Let's continue the conversations, and watch out for the next month edition of the UBA Ghana Business Series. We're going to bring you another exciting conversation, and that will help your SME business to grow. We want to help you to grow. At UBA, we say your small business is big business for us, and so we play a lot of importance on your business and want to help you to grow. Thank you very much for joining us for today's conversation, and we'll meet you on the other side next month, same time. God bless.
Thank you. Thank you.